If we are to conduct research among the finance and accounting people, I know we don't like sustainability. I know because many times the perception is what does that got to do with finance and the like? But the world actually wants it. The world had moved on to this particular topic and we cannot ignore it if we want to be relevant. Actually, new harm has been created by the IFRS, International Financial Reporting Standard, called the International Sustainability Board. If such can happen, we know how important it now is to the corporate world and to the people that we are as finance people are trying to serve. And even though I know we may not like it, we may not want to hear it, but we just have to embrace it. It's like somebody trying to set up a business. Majority of the time, the gurus will motivate us to do our passion, to go for our passion. Mm, it is good to go for our passion. It is good to go for our accounting. But what of if our passion is not what the world wants? What of if our passion is not selling? Then it is better to sell what the world wants. That is the honest truth. And this is uncommon business idea I just gave you there. Many organizations that actually flourish in some industry, they are not actually selling what the world actually needs. They sell what the world actually wants. So it's not about their passion, it's about what people want to buy. I can give you example, but I don't want to spoil somebody's market. And of course, even some of us are patronizing it. Some of us are in want of it, not in need of it, and we are buying it. And of course, we are all together, we all make our different choices. So fundamental truth now is that we cannot ignore sustainability accounting as finance person, as corporate strategic management and ethics person, as strategic managers, as strategic finance person. We cannot, please don't ignore this topic if it shows up in your maybe laptop gadgets in your view. My name is Gbenga Olatunji FCA from GJAMES Associates. I'll try as much as possible to break this down into smaller details and the like. Please, if you are hearing beeping sound, is the fire alarm that is trying to, maybe the battery is bad. Please pardon for a while. We don't know where the technical person will come and change it and attend to it. Let's move on. So we are going to be looking at a lot of things that we need to know, especially for exams and the like. Another truth to establish why we actually need this is this. Big European airlines, EasyJet, had actually conducted the research. Of course, it's in public domain, but I'm privy of it because I did a research along the line, and the conclusion of the whole matter is this, that sustainability actually affects how customer patronize us. And if an organization like that can partner with Rolls-Royce, can partner with Boeing to ensure net zero emission and the like, and they are actually accounting for it. We ask ourselves as finance managers that want to be relevant in the industry. not to guard ourselves with the knowledge. Then we'll be doing ourselves a bit of harm than good, and we're not ready for that. So having said that, let's go into the details little by little. So what we'll be looking at first of all is what is social and environmental footprint. And I want to believe, but I will run through it. I will run through the triple G. I will run through, if time permits us, the disposition, different disposition or world thought leaders and their view, their perception about it, the pristine and the like. We'll touch on them, but we are going to take our time, having established that it's important that we know what we need to know about sustainability. When we're talking about footprints, actually we are talking about the impacts that business activity is making or had made on the planet Earth or our community, our environment, culturally, ecologically, and the like. And here is the tricky thing, and we are going to get there. Then how are we going to measure all this? And we are going to measure it. And that's why now there's a board to manage that under IFRS. So we see that it's not impossible. We just need to have a change of mindset and go along the way so that we can, if yes, make money, because once we are relevant to our organization in these regards, they can't move past us, right? So that is footprint. So the purpose of economic activity basically, of course, is to create wealth. But when we are creating our wealth, we should not lose sight on the environment. We should not damage the environment, especially when we are talking about sustainability. We are talking about the ability of the present, that is, we that are on earth now, not to hamper or tamper with the ability of the next generation to provide for themselves, to live a better life, because we came and damaged the earth. So that is basically, in a layman's language, what sustainability is. So having established ourselves in what environmental footprint is, that is our impact on our society, on our community. So the amount of raw material we use, trees that we cut down, non-renewable resources that we've exploited, like digging gold mine and like, once we take them out, we cannot restore them back. So that is a footprint. The quantity of waste and emission, like EasyJet partnering with their partners, the Rolls Royce and the like. So the emission we created, the atmospheric issue that we created, and how to manage it. So we must be able to measure it. And of course, we can say, how are we going to measure our impact? Of course, let's say, for example, the paper we are using comes from the trees. We process it after falling down the tree. It's our tree. I hope we know already. I hope many of us know that. So how many trees did we fall down to make that book that you just read. And that is why I would say now everything should go digital, so that that impact will be minimal. And of course, when we go digital too, even our laptop emits, of course, not to now talk of the vehicle that move around, the energy that we consume as we move around, and the pollution in the air and the like. So one widely used method of footprint analysis for economic activity is to identify four environmental consumptions or issues. And once we are able to do that, we can measure the use of our energy. And you know, energy can be in form of so many things that we use: the petroleum, the diesel, and the like. And of course, they are crude. They are coming from the crude, and once extracted, we cannot restore them. We cannot restore them. So that's one aspect of that we need to look at. Then the second aspect is the land we occupied, the land space we occupied, especially we that are in real estate managers, finance executive. Your footprint on planet Earth, that's per meter square that will sell in thousands of pounds, of dollars. You understand? What is the amount of that to the Earth? Not as income now, not as cost that of purchasing the land, the cost that it costs the society for that building to be erected in that place. We must factor it in, and that is where the triple bottom line approach comes in, which is telling us about we make profit, but two, the second P, our planet Earth. The third P in the triple bottom line is the people, the people, the people, the people. So the space, we've talked about the space, we've talked about the energy we consume, the food products, we consume, the food products that we consume or got damaged as a result, those things that we use and other animals can no longer have access to. How does it impact them? Some animals had already gone to extinct. And let's say, for example, what's the cost of not having dinosaurs around to the planet Earth? Planet Earth actually have dinosaurs before, but we do not have them. I think another animal we do not have again is a unicorn. Unicorn does not exist again. They've gone into extinction. But what is the cost of not having unicorn anymore to the planet Earth? So these are the footprints we are talking about. Last but not the least, we talk about the forestry, the forestry, the forestry, the forestry. Like I mentioned it initially, we fell tree to produce books, of course, for those that are burning wood in form of maybe bonfire and the like, for some industry that are still using that. Forest deforestation, what is the cost? Not the only the cost of buying that wood, the costs that it caused that forest to be deforested. Maybe there is any English like that. Okay. The world now moves to carbon neutrality. Carbon neutrality, in which we try as much as possible to not to pollute the air, not to pollute the air, like the plane that flies and the aircrafts, the organizations, the airline, and like the example of EasyJet that I gave. They are trying as much as possible. They have the vision that in the next, I think, vision 2050 thereabouts, they will have net zero as they move on to hydrogen. So carbon neutrality is our ability, the ability of our organization to try as much as possible to lower the effect of our organization in polluting the air or emitting carbon dioxide. So we need to be environmental conscious and measure the impact of our business along that line. Social footprints, when we're talking about social footprints, we're talking about how it affects people. We've spoken about ecological footprints before. Now when we're talking about social footprints, how does our business affect the people around? Are we people centric? Are we people friendly and and how can we account for people? In sense, so many people are counted, but in real life, few people can be accounted for. How are we accounting for people? That's a thought-provoking statement that I just made there. In sense of people, many people are counted. All people as much as possible are counted. But in reality, very few people could be accounted for. So organization's footprint is the impact of our organization's activity to be accountable for people or to the world for the people that has worked with us. Some organizations do better than the others, right? But now the world is focusing there. The world is focusing here now, and we need to be more people-centric and people-friendly. Not necessarily we need to be an HR now, but even as finance people, we need to let our executives, our board understand that this is where the world is going. Of course, the topic we are talking about is board level dialogue. It's board level discussion. So the total number of employees that we have, the proportion of the total workforce employed in different parts of the world in the same industry that we have, the proportion of total workforce that's actually female in our organization than maybe male and the like. Of course, too, the ethnicity, are we mixed or we just employ our tribesmen and the like? So all these dynamics now are very important to the world, especially if we want people to patronize us. An organization that just employ basically those that comes from the founders tribe is not sustainable. It's not sustainable in this present age and time. and that is what we are talking about. It may, for any psychological effects or that they are trying to promote, but on the larger scale, on the global scale, it doesn't work anymore. It doesn't work anymore. The health and safety at work and the like, how good, how tight are we in that area? Then when we are talking about social ecology, of course, they too, they are of the opinion that the businesses need to do better than what they are currently doing and ensure transformational change and positive impact in the ecosystem. Basically, we need to actually talk about the next, but it's going to get long. We need to discuss more on sustainability reporting, but because of our time, I wouldn't want it to be longer than this. So next we meet, we are going to talk about the triple bottom line, which I had already mentioned a bit. Look at balance scorecard and sustainability balance scorecard. We are going to look at SAM, that is sustainability assessment model. We are going to look at FCA, that is the full cost accounting, and some other aspects of sustainability accounting and its dynamics. From GJAMES Associate channel, I want to believe you've enjoyed value for your time. Why won't you subscribe to GJAMES Associates? Gbenga Olatunji FCA has been speaking. We have value to life. We have value to your business.